Yo, what is going on with GameStop today? This share price absolutely rocketed. I think at one point it was up 69%, maybe a little bit more. That's just the title that I saw in an article I read. But I want to explain how on earth a company that loses money can see such a dramatic increase in their stock price, because there is a very good explanation for it, and it's honestly a pretty entertaining story. Now, on top of just being entertaining, there's also a more important lesson behind this, because these are the types of moves that you need to be extremely careful of to make sure that you're not on the wrong side of them, but you can also make a ton of money off them if you're on the right side of them. And because of that, I think it's really important to talk about. So I'm making this video for you guys who have no idea what a short squeeze is, or who don't really understand what happened with this play in general, but you do know what a short squeeze is, because it's the biggest meme, man. And it goes to show how crazy the stock market still is this year. We have some incredible volatility. I mean, this thing was trading like a penny stock today. I mean, the moves that we saw on this thing were absolutely wild, and I'm just excited to be able to share this with you guys. So let's dive into my computer. Let's talk about why it went so crazy, and how you can take advantage of plays like these for yourself, because there's a ton of volatility and we want to get that bread, baby. All right, guys, so I'm here at my computer, and this is the yearly chart for GameStop. So you can see, I mean, it's just kind of been fading down over the last year, and then it found a bottom here around, just under $3, which was very, very low. And since then, here's what it's been doing. Started squeezing its way on up. Boom, 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 boom. And then recently, in this last week, it exploded above 20, went all the way up to $40, consolidated in that area, and then today went on a crazy run from this $43 area all the way up as high as 70, hold on, let me do 5-minute candle, that'll be easier. All the way up as high as 76.76, which is such a crazy move. And the reason that something like this happens, again, is because of a short squeeze. And the reason that people are shorting this stock is because it loses money. And fundamentally, it doesn't make sense to be longing this stock or buying this stock, because it's a company that really is not looking like it's performing too well. And I know that there are some whisperings that they might be getting their e-commerce side of the brand revamped, which could potentially help them to get back in place with the marketplace and get more in the times, if that makes sense. So potentially they could do a brand revitalization and not be so retail oriented, because that just doesn't work super well right now, especially given the pandemic situation. Not as many people are shopping in stores like GameStop, in retail stores, and because of that, it's a little bit harder for companies like this to succeed. But if they can, focus on their e-commerce side, potentially they can turn the company around. But for now, the company is still losing money, and this is just such a crazy move. So if we go to this article, you can see here, it was actually halted today. That's one more thing I want to talk about. So you can see it was halted today after shares surged around 69%. And for those of you who don't know what a halt is or why it happens, a volatility halt is just one of the many types of halts. But a volatility halt happens when a stock goes up or down too much within a certain period. And if I go here, again, this is a 1-minute candle, you can see the time frame. So this is 12:39, 12:40, 12:41, 12:42, and then it reopens at 12:47. So the next candle is 5 minutes after that. So typically, when stocks halt up to the upside, you're gonna see a gap up typically, and then a lot of times it'll gap up and then immediately tank back down and halt going down. And that's actually what happened in this case. And you can see reopened here, tanked all the way down, halted going down, and it's just a set amount. I don't personally have access to this, but some people have access on their level 2s to these specific halt levels, so you can know, like, if the stock is here, you can know, oh, if this touches $63, it's going to halt to the downside, and that'll be another 5-minute halt. And sometimes it's 5 minutes, sometimes it's 10 minutes, but typically it is in that area. 5 is what's most common. And then after 5 minutes, the stock reopens, begins trading again. It bounced all the way back up here, halted again to the upside, and then reopened. I believe it opened down here, but then it immediately bounced and then just ended up fading off. So that's what happens when you get these volatility halts. Again, it's very normal. You can see exactly when it's going to happen, when it prints a ton of stuff on the time and sales. There's a ton of, trades printed, and it's all at the same price it's all green, it's all red, something like that, and then it halts, and then it stops trading. Whenever the last one is, typically 5 minutes after that. So you can see 16:18:01, it would open 16:23:01. So that's how that works. But yeah, in this case, like, the story behind this is literally so crazy, guys. It's so crazy. So if I go to this article, you can see that GameStop rocketed above its 2007 peak on Friday in a move that one short-selling expert thinks could possibly kill investor interest in shorting the video game retailer. So to explain the concept of a short squeeze extremely quickly, in case you guys already know what it is, short selling is where you sell before you buy. But the goal is the same thing. You want to buy lower than you sell. So if you're trading normally, you buy low and sell high. If you're short selling, the goal is to sell high and then buy back lower later. But when the trade goes against you, you can lose an infinite amount of money because stocks can go infinitely high. They can only go down to zero, but they can go infinitely high. And once you get to a certain point, typically people have risk levels that they are willing to risk. And a lot of people on this stock probably were using these risk levels. If you go back and look at the max chart, the highest level this stock has ever been is right in this 63.77. That was the highest previous price of the stock. So a lot of people today were probably using that as their risk on a short. You know, they might have gotten in, call it here, right here, 63.77. So they might have gotten in, here, $50. They might be thinking, there's no way it goes higher than that. I'm risking that. Or they might have gotten in at $58, $60, thinking there's no way it breaks all-time highs. But when it does, they're limiting their losses by buying back in. And when they buy back in to cover their short position, it just pushes the price even higher. And that's why we got this crazy rip here. If I go analyze this a little bit, you can see the first time it ripped through, it looked like it rejected that break, which is a short trap because shorts are thinking, oh yeah, I'm getting in here. It's going to reject at the all-time highs. But then it ripped right back up through that and then kept on spiking and halted to the upside. So it's pretty crazy. There's so many examples of stocks like this. Let me just walk you through a couple. ACY is one of my favorite ones to talk about. This one went absolutely insane. It went from $3 one day and the next day it was at $38. RHE, I traded this one. It went from $150 all the way up to $15.77. I bought this at $3.30, sold half at $12, half at $6 on the way back down. GLSY, I believe, or GLSI. Yeah, so this is probably the most insane one. This one went from $5 all the way up to $158 in one day. These are the types of moves that you can get when you have a short squeeze, and it's just pretty cool to see. So now let me go back and explain a little bit more. So basically, this is a big meme from Reddit's Wall Street Bets. And it's because it's like a community of stock traders who make ridiculous trades. And occasionally they will pay off absolutely enormously. And most of the time they completely flop. And they just lose money. But typically speaking, Wall Street Bets is like just a funny meme community that if you're into finance, you can enjoy. But in this case, they took offense to the fact that this one, it's so funny, this one Citron research guy, Andrew Left, was a big short seller of this stock because from a long standpoint, if you want to buy this stock, it just doesn't make sense fundamentally because it's losing money. And he made a YouTube video talking about the reasons he believes the stock would soon fall back to $20. And the people of Wall Street Bets took that as a challenge to push this thing as high as possible, which just turned it into a meme, man. So because of that, it just went absolutely exponential. And you can see here, the shorts, including him, they lost an estimated $1.22 billion in the 40% intraday jump. Let me repeat that again. Shorts lost $1.22 billion on this stock today. $1.22 billion. That is absolutely nuts. And the amount of market cap that was added to this today is ridiculous. It's absolutely ridiculous. I think they added, well over $1 billion to the market cap of GameStop today, which is just crazy because is it worth it? No. Is this going to fall down eventually? Yeah, but do we know when that is? No, we don't. Because here's the thing. this actually held up the gains surprisingly well from today. Typically, when you have a short squeeze like this, once it reaches the top, it just absolutely cracks and falls back down. There are some bounces, where shorts are covering, because again, when they cover, they might have shorted here and they cover here, but when they cover, they have to buy back in, which makes these little bounces. And momentum sellers hop on, so they pop up a little bit. But in this case, it closed up not too far away from the highs, man. I mean, it didn't close down here in the 50s or the 40s. It closed up in the 60s, mid 60s. So I could honestly see this thing continuing to squeeze. But what you want to do is you want to make sure that you get in on these early, because if you try to chase these moves, it's disgusting. And you're going to end up getting absolutely screwed over. You can buy in and hold and hope. And if you buy in at this $70 price and hold and hope, you will lose money. Or you can buy in at this price and you can cut when it goes against you, and you will also lose money because there's some massive rips. I mean, this is a 1 minute candle, and in 1 minute it went from 72.88 all the way down to 61. So I mean, that was over $10 in 1 minute. So if you buy in here and you don't have any risk, you're going to lose money. Or if you do have a risk, you're probably going to get stopped out, which is why you have to recognize these things early and know when to get in. And I didn't get in this one. I really didn't. But there's nice plays. There's nice opportunities for entries. If you look here, you can buy these breakouts before it gets up too high, and then be ready to cut if it goes against you. Because you can buy these breakouts, and that worked pretty well all day long. But once you get too overextended, at that point, it doesn't make sense anymore. So if you can get in early before these massive run-ups happen, that's typically a pretty good entry. And this is one that I don't normally like to dip buy, just because it gets scary, man. It was very scary up in there trying to trade it in that area. Here, there are a ton of red candles. So you can see, I mean, there's kind of a lot, which made this an okay dip buy. But in general, not the type of stock that I would personally choose to be throwing my money into. And then there's just some great memes that I absolutely had to share here. This dude made it. If you have not seen The Wolf of Wall Street, I definitely recommend it. It's very important if you're into stocks. But this is basically copying a scene from a movie and applying it to GameStop. So this is when he is calling people and convincing them to buy disgusting stocks because it's his job, and he buys them before them, and it's a pump and dump. And once they buy and spike the price up, he sells, makes a ton of money, and then the price tanks back down. So that's Leonardo DiCaprio. He says, "The name of the company, GameStop, is a cutting-edge video game store out of the Grapevine, Texas, awaiting imminent patent approval on the next generation of virtual reality omnidirectional gaming devices that have both huge military and civilian applications now." So, he does his best to sell these stocks and make them seem like they are the greatest thing in the world so that those schmucks can hop on the train and he can make his money off of their losses. And I feel like that's what might happen with GameStop if there's too many people who buy in unsuspecting and unaware of what is going to happen, because short squeezes always result in a big crash. It's just a matter of time when they are going to be. So could this keep squeezing? Yeah. Could this go over 100? Yeah. Could it fall back down to 30? Yeah. So I would personally not touch this one at this point, just because there's other better stocks that I think are more worth trading. So if you want to trade stocks, trade TSMP, trade MITI. These ones have a lot more upside and a lot less downside, in my opinion. I think the risk to reward is better on plays like this. But yeah, if you're looking for plays like this, definitely check out the Discord in the description below, because stocks are always popping off and you don't want to miss those best opportunities. And yeah, that's pretty much it for this video. I appreciate all of you who made it to the end. We're only 12 minutes in, so maybe it's 8% of people today. You're in the 8% today. And yeah, I appreciate you guys. Thank you. I'll see you in the next video. Until then, let's grow better together. Preguntar, bebé, dime por qué te mientes. No puedes esconder todo lo